Good morning, traders. It's 8:02 a.m. Chicago time on Tuesday, the 6th of June, 2023. Thanks for joining me for episode number 2477. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Good morning. Good morning. Here's the convergent trading pre-market summary sheet. We're looking at another start that is mixed. You know, these mixed starts are an indication of how little is happening overnight. Do you recall a time when all of the action was overnight? We'd come in and there would be like 80 points of range all over the Asian session, and then the first hour, the European session, and then the US session would open, and we'd get, 12 points or 15 points or something. We have the inverse of that currently, it seems, because we're opening mixed and then moving away from there. This morning, the Dow is lagging 32 points, the Russell 2 points, the S&P is within one rotation. 1 second. I was starting to sound like Barry White there. Within one rotation, and the NASDAQ's within one rotation. I forgot to speak about the rotations yesterday. Don't forget that for convergent members, you get a much more detailed sheet, but every Sunday night or Monday morning, we update the rotations, and they have fallen for the S&P down to 4.75 from 5.25. The Nasdaq stayed the same. The Russell has fallen from 3.2 to 3, and the Dow has fallen from about 38 to 34. The S&P has stayed at 23 cents. The rotation represents the one standard deviation, or the 70th percentile of the last 20 sessions of 1 minute swings up and down for RTH. And so we take that, we put that on a histogram, we figure out what the first standard deviation is, and what you're seeing here is what we would consider the amount of points up to which it is normal for those products to rotate. Currently, the ES at 4.75. So, compressing still. On the earnings, nothing major. Not going to go over that. And then on the events, the Reserve Bank of Australia delivered a surprise 25 basis point hike, which is what I'm hoping for next week from the Fed, and kept the door open for further tightening. ECB's Consumer Expectation Survey for April shows significant fall in inflation expectations. China has reportedly asked largest banks to cut deposit rates to boost the economy. Bank of Japan Governor Ueda. Bank of Japan to continue QQE until inflation target is achieved. ECB's not. Inflation still way too high, but worst is behind us. Apple announced yesterday the $3,499 mixed reality headset, basically their version of the Oculus, except a whole lot more expensive. Binance sees a $780 million net outflows in the last 24 hours after the SEC announced the lawsuit. The lawsuit's basically alleging until it's proven in court, that the exchange has been operating a securities exchange within the U.S. without registration, which is a huge, if they lose that case, that's a huge no-no, big time. TSMC planning 3 to 6% hike from 2024. And then for today, nothing really major. Really, we're not, we don't have any scheduled drivers. China's balance of trade for May at 11 o'clock at night. The S&P this morning, the S&P this morning is, where are we? 90 points. Completely balanced, completely and utterly and almost disgustingly balanced inside of the lower distribution of yesterday's range. Yesterday's range was made up of two distributions, and the S&P is in the lower one. 156,000 contracts, relatively low compared to the prior sessions here. The inventory is 46% short. The range is 11 and a quarter points. Ouch. 11 and a quarter points. That's painful. That's like pre-FOMC type of stuff. Um, the high 42.85, the point of control 42.77, and the low at 42.70, 375. Recall yesterday's low was 73 even. So that's what we've got for today. Crude coming off again after popping yesterday. Here's what we've got on the charts. Look at that S&P. Ugh. Just not very pretty, is it? So if we look at yesterday in the S&P, let me enlarge this so there isn't so much noise on the screen. Yes, you can. You may recenter. If we look at the S&P, it's reloading. Let's look at it here. There. If we look at the S&P yesterday, pretty much did as expected, pushed up, expected a weak squeeze to the upside, and ended up putting in a new high above the 4,300. We're really pushing up against what is a 62% fib right in the 43.08 and 10. If you look at, I think, the monthly, some big areas up above here in the 4,300. So it pushed up there. It was immediately rejected early on, and then it made another run for it in the afternoon, came back off. The S&P finished with two TPOs at the low. I'm expecting the S&P, two TPOs. I'm expecting the S&P to continue lower. Remember, the plan yesterday is to poke the high, the overnight high. So for those of you who were there, the plan was to poke the overnight high, come back, consolidate, and then break the overnight low and shoot for, do you recall the price that we looked to shoot for? 75. 75 was the target from above yesterday. We're looking for it to rotate over and get down into the prior settlement and then push through to 75. That was the key trade, and it gave us that trade. Let's see if our active chart has loaded, and it has, and it gave us that trade. But not only did it give us that trade, it created a double distribution, which is nice because it gives us a very clean and clear line in the sand, which is right here, which is a stock zone. You can see that shaded gray area, stock zone put in there by our maven at Convergent, John Peranunzi, whom you'll see in the chat here and there commenting. That guy knows his stuff. So we have a stock zone there, but that's a key area to monitor this morning. We want to see if it does test into the 42.85 to 42.88 or so. We want to see how it responds, and we want to see it have a hard time breaking through there. It has left kind of a double topish overnight right here. And what we have is a legit double bottom, double TPO low on the session, expecting that to fall. So this morning we are completely balanced, mid VWAP on top of each other. We are in the noise, and this may be just the base that we are likely to kind of leave from. So that's what we're looking at. I'm looking for this thing to continue to spill lower. It tested higher than the overnight high. It came back to settlement, so we had our gap to settle. There was nothing there for me. The trade that did set up was right off of here. The looking at the short down into 75, which is there. Then it came back to the IB again, retested, and then if you're a convergent member, I said, okay, this is pretty much done. Once it starts to move back up and we're into the last trading hour, it's not wise to fade the move that occurs in the last half hour, so the closing range. Um, so today, look, I mean, evidence is that we pushed in the morning, pushed again in the morning, put in an RIB, closed the settle. We quote unquote should not have seen the settlement price retest again. It looked very strong on the retest of settle. It looks like buyers really defended there. Note the delta was negative pretty much the entire session. Even as it pushed new highs, the delta was still negative on the session. And it made a retest. And when it made a retest to break through that 43.04 quarter IB high, it could not hold. And this caused a pretty impulsive move down from the top, and what we ended up with a neutral extreme down day, a NED, right? Neutral extreme. Neutral meaning we broke the IB high, broke the IB low, and neutral extreme means we closed below the IB low. The only catch is that the IB didn't move down here, and we didn't close in the lower quartile in the range. So it's not as powerful a neutral extreme down reversal type days we'd like to see. But still, what this market's indicating is that it really tried to hold on to that 4,300 and it failed to do so. Okay, so that's where we are. In fact, there's a pretty decent video I'd like to see by EdgeClear's Angelo. 1 second, I'm going to link it in the live chat, and you might want to look at it. He's a much bigger time frame trader than I am. But take a look at the video that I just posted in the live chat here. And it just goes over some of these levels, like why this may be a struggle up here. This is a weekly prep video that he does for EdgeClear for public consumption that goes over the ESNQ, RTY, and CL on a bigger picture basis. Just click on the link when we're done here and take a look at the video. It has some pretty clear big levels, higher time frame levels, which I can't cover here. So what have we got? We've got a market that is opening in the day generated levels, the day generated prices. We have a market that is stuck in the lower distribution. So our job this morning is to monitor what it does in this 85-88 zone. This zone here is going to tell us what comes next. If it breaks to the other side of the zone, we're looking for a long. And what's the target for the long? Tell me. You tell me. What is the target for the long? If just having followed for years, some of you have been doing this for over 10 years. What is the target for the long? If it breaks through the LIS, the line in the sand, or the over-under line, what is the target for the long? Come on, I've given you more than 7 seconds at this point. The target becomes balance. Up. It becomes the 42.97. You have to make sure you have something offered to exit at least a portion of your position into the prior point of control. Very important price, the prior point of control. And then the expectation is it would waffle around in there, 4,300 century figure above. So this is a pretty sweet area. If we do get there and it does break higher, not that I'm saying that it will, And then if it breaks the 4,300, then you're looking for it to bounce around in the 97,300 area to continue and retest yesterday's high at 43.0550 or 43.0575, I think is what I recall. But the primary scenario is an attempt higher, fail, and push lower. So push lower, push lower. Where does that take us? Let's look at the TPO chart. Push lower. So what happens when it pushes lower? What we're looking for is the double TPO to be gone, and then we're looking for it to go right through Friday's range, and we're looking for it to be back at 42.50. 42.50. So it's it's trading at 42.79 currently. 42.50 is well within a day's range, and that would basically cancel out Friday's range. And then the next thing we want to see is, do you fill the gap? Do you feel the gap? Okay, so the gap zone becomes key, and if it breaches the gap zone, you're looking for 42.39, 42.38. 42.39 to fill the gap. So that area becomes filled, and then if it's not able to find any stability there, where does it go? Yes, you guessed it, the point of control below there, which is 42.28, something like that, 42.28. But we're getting ahead of ourselves. And then if it can't hold the 42.28, you have this weak structure of singles, and it's got more and more and more to do to the downside. But what we have yesterday is we opened, we tested up, we finished lower. Very important to note that. We closed the two single prints there. We left with a double TPO low. So this is the primary scenario. Okay, so what then with the NASDAQ? Look at the NASDAQ here. The NASDAQ, remember yesterday I talked about how the NASDAQ was just losing fuel as it has pushed through this 500, 550 area. It's kind of losing fuel. Yesterday it had a lot to go on, and it had that Apple announcement and all that. And it ended up putting in almost a double TPO and falling right back into this rectangle, which has multiple taps on it. And the NASDAQ, to me, it looks like also like a case of stocking shorts for a push, and the NASDAQ's balance point, if it starts to move lower, becomes the 458, giving us, about 100 points or so of range. I'm very likely, if the S&P continues to trade the way it is, I'm very likely to switch to the NASDAQ as a focal product and talking more about it and less about the ES. I know the ES is extremely popular, but I think the NASDAQ yields some pretty decent opportunities in lower volatility environments. Starts to trade like the ES did, a year and a half ago before the Fed started raising rates. So, but the NASDAQ has really nicely tapped right into this 560, has busted through the 560 with a nice little sweep here, retested the 560 from above. So you could see 560 right here, 553, and then there's another one right here at 553. And then yesterday it poked it twice, put in almost a double bottom. The low here is 545 and 544 by one tick. Pretty good for a thin product. So to me, this looks weak. I'm wrong if it takes out the high from yesterday at 695. And so that's what the NASDAQ looks like to me. Same thing as the S&P, except less clarity. When we look at the NASDAQ's intraday action, here it is. When we look at the NASDAQ's intraday action, it's not as clean. You see the S&P had its IB way up here. And the NASDAQ kind of put in a double bottom here, but a double bottom as you can see here, but kind of finished. It's neutral, but it's neutral normal, so it's not as clear, but it's still a product that has a balanced profile overnight with the point of control in line full with full session VWAP, full session mid. This is a balanced overnight session. It's trying to fight its way, but it looks weak to me. And when we look at the relative delta on the NASDAQ, look at this relative delta using MBO data. It is just, it's not looking all that hot, right? So yesterday, pretty strong negative delta, and then this morning you have the larges and the smalls were on the same side. Very larges lifting. We could see some lifting on the tape, some pretty good size going off there. But overall, it looks weak to me. Price and delta moving in the same direction, and that is to the downside. That's what the NQ looks like. And then crude made a nice pop higher last week, and then yesterday it opened, kind of pushed down right off the open, consolidated, and continued to push lower. There's a lot going on with crude. It's settled at 72.15, which is basically the midpoint of this entire range, and is now below it. So crude to me really looks like it is likely to get right back down into this void here. So you can see there's weak structure right in there, and it almost came down and tested this. So crude, if it takes out yesterday's low, it is very likely to run all the way through to the 68.80, 69. So it's very likely to come down here and here, this area right here. So crude sets up again, has squeezed the shorts, but is setting up for another run down as far as I can tell. So that's what I'm looking at. That's it. That's all I'm going to cover. We've been on for 21 minutes. That's plenty. Hopefully you're picking this stuff up and layering your own view of what the markets, of how to trade the markets. And remember, at the end of the day, you cannot mimic anyone else's results. It's just practically impossible. Heck, automated systems can't mimic each other's results executing the same signals. So to me, it's wise to just take what I'm giving you here and see what makes sense to you, incorporate it, test it, check it, and then use it to make it your own. Please don't forget to hit the subscribe button on YouTube. If you're on the Edge Clear page, just find the YouTube symbol, go to YouTube, hit the like button, hit subscribe if you're not subscribed. It's free, and then I'll catch you tomorrow morning. Take care.